Okay, so let's give a breakdown in why China is behind or the major metrics and why they're behind the global luxury slowdown that's taking place.
Promised land for the $380 billion luxury goods business. Now, it is the land of losses. Today, we're looking at why the luxury business became so dependent on China and why it's suffering now. I'm Robert Frank for Inside Wealth. And luxury goods sales total about $380 billion a year. But last year they declined 2%. And the reason was China. Luxury lost 50 million consumers over the past few years. And that is all because they bet so big on China. But after COVID, the young Chinese stopped buying. You had an economic crisis there. And more importantly, a psychological crisis among young, wealthy consumers.
So what's interesting is China's share of the global luxury market essentially influences the whole industry, right? So although China accounted for a large share of global luxury spending, historically around 35 to 40%, the slowdown here has outsized effects on the global brands. So you can see from Louis Vuitton, Versace, the impact of what's happening in China is clearly evident in the decline in the sales that's taken place. Now, China's domestic luxury goods market actually declined by about 18 to 20% in 2024. This basically reversed the roughly 2020 levels after early rapid growth. Bain and Company actually stated that they estimated a negative growth in China in 2024 after strong expansion in 2023. We're also seeing a similar metrics last year, 2025.
Youth unemployment soared to over 20%. And rather than buying stuff and status, young people wanted experiences and memories. So the whole market shifted. But there's another.
I think that's also crucial. And I think that's across the board. I alluded to that in the previous video where I basically stated in the UK, you're seeing a lot of build to rent new developments taking place because it's unaffordable for a young individual that's finished university, whatever it may be, or moving along the corporate ladder to be able to have £100,000 to £150,000 saved to put down as a deposit. It's very difficult nowadays. So people are more, it's becoming a renter's market. And this is the same scenario that we're seeing in China, that people are not really so much, the younger generation, so much interested in acquiring assets. They're more focused on experiences. How can I be mobile? How can I be able to travel to different locations or experience different events, concerts, go into interesting restaurants, galas, things that's an experience that no one can be able to take away from you.
Secret reason for why luxury is suffering in China, and that is the rise of local brands. From watches to jewelry to fashion, even supercars, China is now making its own luxury products. And because there's a new kind of nationalism in China that values Chinese brands, luxury companies are now winning over the European brands. So I want to tell you about a watch company in China called Atelier Wen. This is by two French people that live in China, have worked in China for years. They just launched a new watch that is titanium, that's got a double sapphire crystal, that is a gorgeous purple color that costs $3,500. It's taking the country by storm. A watch like that from Switzerland would cost 10 times as much. And by the way, China brands are doing the same thing with supercars, with other luxury goods, and this is a big threat to.
I think this is true and across the board. It's not just with luxury brands, as he mentioned, it's also with cars, right? You're seeing a situation with Tesla's taking place. You've got like domestic brands now that people, whether it's nationalism, whether it's the cost, right? I think also there's an element of cost. If it's cheaper, if they believe that the quality is more or less the same, or if not even better, but it's cheaper, why not go for a brand that's actually Chinese, right? And this is what you're seeing. In addition to that, for the luxury brands, Major luxury houses have actually reported double-digit drops in China-related sales. So LVMH basically saw declines in Asia Pacific, excluding Japan, reported sharp falls in Chinese customer numbers. So this is clearly evident of what's taken place.
The European companies. The stocks of the big luxury giants like LVMH, Richemont, Kering, they all fell over 20% last year because they built so many stores in China. They were betting their future in China. And by the way, 10 years ago, China accounted for half of all luxury sales in the world. They expected that would grow. Instead, now, China accounts for only 12% of luxury goods sales. Products that are...
So I really believe that this isn't something that it's just a dip. I think this is a seismic shift that's taken place across the board. And China has obviously historically been one of the largest luxury markets in the world. So this slowdown is going to affect everything globally. But the shift in the consumer values, stronger local competition, economic caution, this basically means that China's luxury slowdown isn't just a short-term blip, and I think it's reflecting deeper changes, inherent changes taking place. So these are things to be aware of, and this is the reason why a lot of the brands, the international brands, are now assessing the situations of, do we need to actually scale and expand branches in China, clearly based on these metrics and data that's happening. So if you like this type of information, please like, subscribe, follow, and I'll come back to you with another one.